What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. Today, we are going to do a full weekly recap of all the SPY trades that we took in the room. So if you're ready, let's step into the war zone. So first and foremost, why don't you let me know where you're tuning in from tonight, and I'll throw your name up on the screen. So who do we have in the building today? We have Happy Hookers Fishing. What's going on, brother? From Minnesota. Good to see you. Bad Indie in the building. Roop, what's going on? Father and Son Food Co. What's going on? From Vancouver. Good to see you. Ski. What's going on, bro? Anez. What's going on from Brooklyn? Andy from Muskoka. Kay from Missouri. Kojak. What's going on? Motivate Sage in the building. Chillwack. What's going on? All right. So let's get right down to it, and let's start off with Friday. Okay. So a few things that you need to do whenever you are trading. The first thing is you need to retweet and let everybody know you're live. Now, let's do this. That's one thing you got to do when you're trading, retweet. And you always need to understand where you are opening, okay? So that's something that I do every single day. So what you want to do here is before the market opens, take your two lines, okay? Put one at the high like this, and then take another one and put it at the low. Very simple, okay? So you always want to know where you're opening, because where you're opening is going to determine how you trade, all right? So I'm going to go down to the 3-minute chart, because this is where we started on Friday, and I'm going to play the first bar, okay? So here we go. So this is the first 3-minute candle on Friday. So if we go to my live commentary from Friday, you can see that we went short at 9:33. Okay, so we went short at 9:33. So let me explain to you why. So this strategy that I'm going to show you guys right now is called the opening range breakout. So essentially what the opening range breakout is you allow for the candle to close, okay, on your desired time frame. So for me, I like doing opening range breakouts on the 3-minute, the 5, and the 15, okay? So I'm here on the 3. So what you have to do is let that candle close. So it's going to take 3 minutes for the candle to close. And once that candle closes, then all you do is you take the breakout of the candle. So if it breaks the high, you're going to go long, buy calls. If it breaks the low, you're going to go short and buy puts, okay? So the opening range breakout right here is not to be used every single day. It's a strategy to use based on momentum. So if there's momentum in the market, that's when you want to use the opening range breakout, okay? So hit me with a 1 if you're following me so far. So the opening range breakout, we're here on the 3-minute chart. That's the strategy we used on Friday. And we bracket both sides, okay? So if it breaks the upside, you go long. If it breaks to the downside, you go short, okay? So the reason I took an opening range breakout on Friday was because of the actual candlestick pattern itself, okay? So I've been trying to add a little bit more layers to the opening range breakout in the way that I use it. And the main reason I wanted to do an orb here is if we go to the 1-minute chart, you'll be able to see it with me clearly. So in the morning, in the first 2 minutes, we had a lot of bullish price action. So if I go back to the 3-minute chart here, you'll see that at one point we were all the way up here at 448.21. So we were a big green candle in the first 2 minutes. And then within the last minute of the 3-minute bar, we turned around right away and became very bearish. So that's why I was really interested in this pattern, taking the orb. And you can actually see on the 1-minute chart, you could see a nice outside bar. And what the outside bar means is that we broke the high and then we turned around. So right there, that gave me a clue that, okay, maybe we're going to have a lot of momentum right away because of the fact that we were going bullish. And then in the last minute before the candle closed, we turned around and just we basically trapped a lot of the bulls, okay? So hit me with a 3 if you follow me there so far. So I'm trying to add a little bit more layers now to the opening range breakout. And again, one of them is looking at the actual candlestick pattern, trying to read the price action. So if we were just going sideways, like if this candle was just going like this, then I wouldn't have been interested. But what I liked is that we popped up, and then within the last minute of the 3 minute, we turned around. And that gave me a clue that this could become a very volatile open. Okay. So all we did right here is I'm going to draw a line. So once that 447.60, once that broke, we went short right there. Okay. And then if you go into the room, you can see we went short at 933. And then the first target was 447.43. And then so on and so forth. We hit all of the targets. And when we get into the trade, I let everybody know like what's the next target. And we just keep going down the ladder. Okay. And if I show you guys here, if we take a Fibonacci and we just put it on this candle, what I like doing is I like using these Fibonaccis as targets for my profits. Okay. So for example, as once we break this low, I want to scale out from the 272 all the way down to the 1. And then I just want to move the stop loss. Okay. So once we start hitting these targets, this is where I take some profits. And then I start trailing my stop loss. So I get my stop loss to break even when we're far enough away. And then if you want to be very aggressive, you can just start trailing each of the candlestick highs on the way down. Okay. So there we go. So that was the one play that we did live on Friday in the room with the SPY VIP. Hit me with a 9 if you guys followed me there. So that was the one we took together. And then there was a previous day's range trade, which was a bonus play. And that one was also a winner as well. So I'll just show you guys that. But in terms of my live callouts, the only one we did was the orb. So if I take the Fibonacci from the low to the high, this is one of the strategies we like using. It's called the previous day's range. So this is the previous day's low and the previous day's high. And right here is the 61.8% pullback, which is the golden fib. Right here, this is our level of support. So a lot of people, what they did is once we came back down to the 618, we just bought calls. And then if I fast forward, boom, that's all she wrote. So very good. So Friday was very clean, very happy to have a good Friday. And just be able to lock in some profits. So that was Friday. All right. So let's go back to the 5 now. Okay. So Friday in the books, hit me with a 10. If you guys followed me, Friday done. Opening range breakout. Very simple. Took the short based on the candlestick pattern, put a stop loss on the other side of the bar. And that was it. One play. So don't need to complicate things at all. Just take whatever you can get. And, if it went the other way, we would have just taken a stop loss. And that's the thing about 0 day to expire. You really want to just get in and out, leave a runner on, and move on. You don't want to really be over trading because you could get into a lot of trouble on those days. Okay, so let's continue. So now let's go to Thursday. And let's hit the replay. Boom. All right. So we took a short on Thursday. And I'm going to explain to you why. The first thing to remember is if we look on Wednesday's price action, this was the FOMC day. So all of this price action here from 2 o'clock into the close was all FOMC related. Okay. So this was all FOMC. And that's very important because the wicks of these candles on the FOMC are very key for my trading strategy going into Thursday. Because of the fact that a lot of times there's going to be algorithms that are actually taking these shorts here. Okay. So let's go to Thursday now. All right. Oh, that's Friday. Okay, here we go. So Thursday. Okay. So good morning, friends. We're on a winning streak and need to protect our gains. We have an inside open today. So size down and let's be patient. No need to force anything. So I didn't take an opening range breakout because if you look at this one, we opened pretty much in the middle. And I didn't want to take an orb, especially with this candle being so big, because then I felt like I would be chasing. And I knew that since we're kind of really in the middle here, that we could probably see a reversal. Okay. So that's why I didn't take an orb. And if I take the Fibonacci from the high to the low right here, so the area that I was watching is, if I take a rectangular box, is between the 618 to the 786. Okay. So this is where I was looking to get in short. And the reason is because this is the previous day's range fibs. as well as you could see here that there was a lot of rejection in this area. So what I did is I just waited patiently here. And then we ended up getting short at, be ready, starting to short. So we got short at 940. Okay. And I'm going to walk you through that. So the second bar came in into the zone. Okay. So a lot of you might not be familiar with this. But if you look at this chart, these two candles probably look very bullish, right? And that, that might make you think you want to be bullish. But for me, because we have an inside open as well as the FOMC wicks, I'm basically saying that this could be an area of a reversal. So even though it was green, I started shorting. Okay. So hit me with a 1 if you would have, if it would have been tough for you to short there because, it looks bullish, or hit me with a 2 if you have no problem at all. So sometimes when you're trading, you have to do the opposite of what's on the chart. Like that's what's going to give you a good risk to reward, because if I'm shorting in this area, I'm going to have a good risk to reward than chasing down here, right? So I went short right off the bat here, had my stop loss. Let me show you guys. So my stop loss was 447.92. So I'm going to take this green line and put it up. There was my stop loss right there. So a little bit outside of my box, there was my stop loss. So we started shorting at 940 right into the zone here. And then we took a little bit of heat, guys. Like it almost stopped us out. You could see when I said that, it almost stopped us out. And then we started hitting targets on the way down. 446.80, 446.47, 446.20. We started hitting the targets on the way down. And let me show you how I took the targets. So this time I used a different approach for the targets because I didn't take a candlestick breakout. Instead, what I did here was I took the fib from the low to the high of the actual morning range. And I just used these Fibonacci's as my targets. Okay. So I started scaling out on the 50, 618, 786, all of these. And then I was very quick with locking in profits on this. Okay. And I just killed the position because I was doing something called fading, and fading is a little bit more tricky because you are going against that initial momentum. And then sometimes you're going to, like you'll see here, you'll have an algorithm step in. So, and I know some people in the room took this play instead of the short that I took. So we had that pullback down to the 786, and then the bull algo came bam, bam, bam. Okay. So the bull algo came quickly. So whenever you're fading, whenever you're doing something that is the opposite of the chart, sometimes you have to go quicker, meaning you have to scale in profits. You have to be more aggressive with your targets, and you can't be greedy at all because it could change on a dime. And that's exactly what happened here. All right. So we had that short, then we had this bull 786 fib, and then we had this beautiful outside bar here, which was the last good play of the day, because after that outside bar, which was here, you could see we had a huge, huge drop. Okay. But in terms of my live call outs, I just did that short with the room. That was it. Okay. So Thursday and Friday were great days. Hit me with a 7 if you follow me so far. All right. So that was Thursday and Friday. So Thursday and Friday, both days were shorts. Okay. Both days were shorts. Very, very, very clean on Thursday and Friday. Wednesday was the actual FOMC day, which was pretty clean in the morning for us. And then, like they always love to do with the FOMC, when the announcement comes, they run stops up and down, and it gets a little bit crazy. So let's go to the FOMC now on Wednesday. Okay, so boom, here we go. So we had the FOMC here on Wednesday, and I'm going to go ahead and press play. So we had a big gap down. Okay. So anytime we have a gap down, one of the things I love to do is an opening range breakout. So if we go to the 3-minute chart, let me hit the replay again so we can see it. If I go to the 3-minute chart here, you will see that we took the 3-minute opening range breakout. So if I take our yellow line just as a reference, there's Tuesday's low. And then on Wednesday, the first candle comes in, nice gap down here. Okay. And then let me go over here to the commentary. Okay. So we also had a short from Tuesday. So when we get to Tuesday, I'll show you that short. But I mentioned right in the morning, if you had some of our short yesterday, you probably don't need to trade for the rest of the week and should just manage the existing trade, because we hit a big short on Tuesday and then we gapped down on Wednesday. So that was good money. So sometimes when you have a big winner like that, it's not even worth trading for the rest of the week, because you might give your profits back, or you might get too overconfident. So sometimes it's better to just walk away. But I went ahead again and I did the opening range breakout. So I'm watching the 3-minute orb here. Who's ready? Went short right at 933, and we did the same thing as we did on Friday. Okay, so let me walk you through that. Here we go. Here's our first 3-minute candle. We break to the downside. So you go ahead, use the fibs to help you with the targets. Okay, so we're looking for the 272. There we go. And then the 50, 618, 786, all of that on the way down. And then once we get near the 56, 618 area down here, I like to take the stop loss and put it to break even. And then you can see we had actually another leg that took us even lower. So this orb, I believe, went for about 50 or 60% return on the options. It was really, really nice because it was 0 day to expiry on Wednesday. So we had a nice 2-leg push down. And like I like to teach everyone that I trade with, always look for that 2 legs. So here is your first leg down, there's your pullback, and then here's your extension. Usually the 2 legs is going to be the sweet spot before we can see a reversal. So anytime you have 2 legs, you want to be scaling out and locking in your profit. All right, and then that was it. That was it, the orb. And then if I fast forward here, you'll see that we ended up having that FOMC back and forth, boom, 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 boom over there. And whenever you have an FOMC event, like one, especially one that comes around 1 or 2 o'clock, you can still trade the morning just like you would trade any other day. But if you start trading in the morning and you notice that it's choppy, then, and you're not getting clean moves like off the opening range breakout, then you want to just be careful and probably not trade, because sometimes they'll just chop straight into the actual announcement. All right, hit me with a 4 for the 4 horsemen, and hit me with a 4 if you follow me so far. So Wednesday, Thursday, Friday, all winners, no losers, just cash money. Okay, so those were good. And then I'm gonna go to Tuesday, which was also a great day, and then we'll wrap it up with Monday. All right, so you see, I love to use the orbs a lot, but in the right situations. Definitely in the right situations. You can't use it every single day because you will lose money in the long run doing that. It's not meant to be used every day. You have to really read the price action and try to get an understanding of what's in front of you. Okay, so now for Tuesday was a triggers day. So we took both of the triggers. So what I'm going to do here is I'm going to draw the triggers on the chart for us so we could see it clearly together. Okay, so here we go. Let's go to the trigger day trades. So these trigger day trades, what they are is essentially these levels that I come up with every single night before the open, and these trades can be fully automated. This is great for like a lot of the traders that I know are not able to look at the chart every single day, as well as during regular trading hours, they might be doing something else. So I always like to have this, which is basically an automated plan. Okay, so here we go. So that is the 5th. So I'm going to go ahead and draw the 2 levels. So 456.45 was our long trigger. So 456.45. And our short trigger to the downside was 452.73. So let's go ahead and do that. So we have both of them on the chart. And then I'll go ahead and make this one red. All right. Okay. And then as another reference here, we'll put the previous day's high in yellow so we see where we are. Okay. So if I go back to the commentary, you'll see that we actually got the trigger right in the morning, right here. So again, we started off with an inside open. So let me let the first candle go through so you can see. So we started off opening in the middle. Okay, so this was an inside open initially, right? So we didn't take an opening range breakout, but what happened is that long candle filled us at 934. So this candle, it hit our entry. So the green line is our entry. So we got filled long basically right off of the first 5 minutes. Okay. So once we take this trigger here, what I'm looking for is to take some profits near the yellow line, which is basically Monday's high, because I know that this could be an area of a reversal. Okay. So there we go. Boom. Right off the bat, we hit a good bit of targets. And then I just like to scale out at new highs. Anytime I get a new high, scale out. And then once we get that good enough push, you can go ahead and put the stop loss. You could start trailing. So I got the stop loss to break even pretty quickly because it was Tuesday and I wanted to lock in. So earlier in the week, I try to be a little bit more aggressive and lock in profits so that I have a cushion to play with for the rest of the week. Okay, so you could see we went long. Y'all awake, sent some energy. We hit the first target at 935, and then we hit the second target, and then that was it. I left the runner on with stops at break even. So that was the morning, and you can see my runner got stopped out. But you'll see what we did here is we just waited. So later in the afternoon, I came back around 12:30, and I said I'm watching for the V trigger short. Okay, so V trigger short means this red line. Okay, so I was looking for this red line to break, but I wanted it to break and retest. Okay, because that is really, for me, if it could retest it, then it could be an even more powerful trade. And let me draw the previous day's low as a reference as well. So let's play through this together. Okay, so there we go. There. So let me let you know when we went short. So I went short at 1:53. So basically at 2 o'clock. So like I said, I wanted to V trigger. Okay, V means it touches the level, it goes through it, and then it comes back and goes through it again. So that's what I wanted to see, because the more times we penetrate a level, the likelier it is to be a bigger breakup. Okay, it doesn't happen all the time, but it's basically like, think about it like this. Any bull that went long here, if we come back, like we pop up, you see that we pop up. Okay, we pop up, but what happens if we come back down again? If we come back down again, now any bull that bought here, they're going to be in trouble and they can get stopped out. Okay, so it was funny because at this level, we actually had the Nirvana pattern, and some people went long here, which was a great setup because the Nirvana is a rare pattern, one of my rare patterns there. So that one was a nice winner for anyone who went long. And then after that, we came back, retested the level here. Okay, we put in, we did take some heat. So we went short on the red line the second time, and it did pull back a little bit. But we just had the original stop, just let it go and see what happens. Okay, so from there, guys, it took some time, but we eventually got that sell-off that we were looking for right there. And then remember, the next day we gapped down. Okay, so this short play right here was a really, really good play. I think depending on what expiry you got, it was easily over 100% with this move into the gap down. So that was a really nice play on Tuesday. And I don't always take the V triggers, but I love to take them when I get the right price action with it. Okay, so there we go. So that was Tuesday. Hit me with a 10 if you guys follow me so far. I'll take some questions at the end, guys. So let's just get through the lesson first, and then I'll take some questions. So that's a V trigger. V trigger, basically, you have a level and you want to see it break it twice. And when it breaks it twice, you feel a little bit more confident in it actually going through. And sometimes if you want to wait for a V trigger, if you wait for it, sometimes you're going to miss a move because sometimes it just goes straight through. So that's the only downside of the V trigger. Okay. And then the last play was on Monday. Okay. So I'll show you that. So on Monday, we went ahead and we did an opening range breakout as well as the trigger long. So let me go get that trigger. So the trigger long was 450.03. Okay, so I'm going to draw that right away. 450. Wait, that's wrong. 453.03, my bad. Okay, so here we go. Here's our green. So that was our trigger long. And then I'm going to go ahead and draw the previous day's high as a reference right here in yellow. Okay, and then we'll go from there. So what happened on this day, if I go back to Monday, was we actually took 2 trades right away at the open. So let me just get to the day right here. Okay, so we got filled on our trigger long at 453.03 right at 9:30. Okay, so as soon as the market opened, you can see if you look here closely. So let me go to a 3 minute so we could see it a little bit better. Okay, so I'm gonna hit the replay right there. Okay, and then I'm gonna play the first candle. Okay, no, I messed up. Let's go back right here. There you go. All right, so the first candle came right away and filled us. Okay, so I had an automated entry right here to get filled with shares. So we got long automatically with shares. Okay, that's the automated part of the triggers. And what I did as well is I went ahead and went short. So some people may wonder, like, how can you go long and short at the same time? It's possible because there's different instruments for SPY. So for example, there's shares, there's futures, and there's options. So you can be long and short at the same time using different instruments. Okay. So we were long with the trigger, but short with futures. Okay. And so we went short here and we had the long right here going at the same time. So what I did here was basically I said, I'm going to lose on one of them. I'm either going to lose on the long or I'm going to lose on the short. And whichever one loses, let's just say I'm going to lose $100. And on the winner, I'm going to make more than that. So that's what I was thinking in my head. I just have to make sure that the winner is going to cover the loser. So you'll see what happened here is the orb actually came and stopped us out on the orb. We did have a little bit of a push down, but nothing powerful. And then the trigger just came through right here and it just took over. It ramped up really, really well. So luckily right here, the trigger, we came back and made our money on the trigger. And even though that opening range breakout didn't work. And the funny thing was that opening range breakout that I showed you, that one on the 3-minute, that was the only losing trade of the week. That was the only one. Everything else was money. So here's the trigger again, the green line. And if we had waited a little bit on the 5-minute, we actually had a holy grail right off at the open. And this was a great way to just enter on the break of that holy grail. And then after that, we had a nice inside bar as well. So there was a lot of great entries on Monday, which were nice. Okay. We also had some Nirvanas later on Monday. 1, 2. This Nirvana was a great winner, and then this one was a loser. So the Nirvana, as you can see, if we just look at the Nirvana here, we have 1, 2, 3, 4. Out of the 4 Nirvanas, we had 3 out of 4 winners, and then this one was FOMC related, right? So you are going to get a lot of chop in the FOMC. So I try to ignore that. Okay. And then we had this one here, nice winner. This one here, a scalp, and this one a scalp as well. So there was some great opportunities in the week. Just that one loser for me. I'm very happy about that. But it was a little bit hard to start off the week like that. You just never know. So once you have a good bit of cushion, you want to make sure that you protect your profits and just try to stay on top of the green ladder for the whole week. Okay, so there we go, guys. Hit me with an 11. If you followed me, that was the recap for the week. That was all the trades that we took. Very simple. I didn't even realize we only had one loser because I just felt like we lost more than that, but I was mistaking that with some of the stock trades as well. So in terms of SPY was just really, really clean. On the stock trades, I had a little bit of an up and down, but I had some big winners like Moderna and Procter and Gamble that basically just covered all the losers. So it was great. So it was a great week for me. Very happy about this week, and I just want to keep the momentum going. Next week is a short week. A Friday, the market's going to be closed, so we have to be very cautious because there could be a lot of chop going into next week. And then there's earnings right around the corner. So we need to start playing a little bit more safely, and you can't be that aggressive when there's a short week because a lot of the time the volume for that week is just going to be light. Okay, so there we go, guys. I'll take some questions now. I know some of you had questions, so please feel free to ask some questions here, and we'll go from there. Between Nirvana and Holy Grail, which one do you think has better win? I just started your system and was wondering. They're both streaky. They're, sometimes Nirvana is better than the Holy Grail, vice versa. The main thing you got to focus on is just your risk to reward. Can you speak on front running the breaks for your swings and how you come up with your triggers for front running? I talk about it in my book a lot, so please take a look at my book about the front running. But it's just reading price action, really. That's all it is. So it comes with time. The more you like, if you traded 10,000 breakouts, right? Eventually you're gonna see you're gonna see things a lot better than if you're just getting started. Okay. I traded 3-minute chart for the orb because it has a good risk reward, and I have some back testing data behind that. Boom. Francisco with the $1.99. Thank you, brother. Let's look. Can you do some setups on AMD and Tesla? Sure. All right. So for AMD, if we go to the weekly here, so for AMD right now, we had an outside bar last week, and that one was a great breakdown. But right now on the weekly chart, I don't see anything. Earnings is coming up basically in a month. So you have to be very, very careful about AMD. And if you get into a position, you have to be careful about earnings. We are at this major support here. You could see right here, this has been a support for a long time on AMD. So you could just play this bar technically. And if we start to turn the corner, you could try for some lottos and see if AMD can push through here. Or you could try the breakdown if we do break below and see if we can get an immediate momentum. Okay, so that's AMD. And then Tesla, like I said, Tesla has a weekly outside bar. So I'm only looking to play Tesla long if it can get back up around 1140. So if we start turning the corner next week and break through 1140, that'll be a bullish sign for me. Otherwise than that, I think we're going to just chop a little bit into earnings, just go sideways or drift lower until earnings. Okay. This week was good. I made cash and stock picks, feeling good with risk management. Good job, brother. Do you recommend 3-minute most of the time? It depends. It depends. If 3-minute is too fast for you, then you can try the 5 or the 15. It depends on what you can execute. All right. So there we go. Thank you very much, my friends, for giving me your time on a Saturday night. I very much appreciate you guys. You guys are great, and I love being here. So those were my trades for the week, and I hope you learned something from that. There's nothing special here, guys. It is what it is. You just have to be able to react at the open and understand, are you going to take an orb or are you going to take a fib? You just react. Okay, you got to react. All right. What I'm willing to do here is, if you guys are interested, hit me with a 7, and I'm gonna go through all the Fibonacci setups because I do take some Fibonacci's, but we take it in a small account challenge with my brother, so I could go through that if you guys would like. Spy VIP channel, yes. So let's see how many 7s we get. Okay. All right. So let's begin. Where is Monday? Right here. Okay. So let's start off with Monday. All right. So I'm just going to do this quickly. So get your pen and your pad out. Let's get into this. So on Monday, we had a push in the morning, right? That's what we call an impulsive leg, right? It just went vertical. And anytime off of that morning, when you have that push, you want to take your fib from your low to your high. And we had this textbook 50% retracement. So this was basically the only good Fibonacci play on Monday. And this is what we call trending. So when Fibonacci's are trending, when the market is trending, you're never going to get a deep pullback. You're going to get slight pullbacks to the 50, 382, and then we're just going to go. In this case, we had a beautiful hammer candle, which was a great confirmation. So the confirmation candles do also help you to determine, if you're confident in the play or not. Okay, so going from there, if I take the Fibonacci of the previous days from high to low right here, you could see on Tuesday, we broke out of the range. And you guys know that I like using these extensions as areas of reversals. So we broke out of the range, and then we came and we rejected the 0.169, which is one of my custom fibs. And then we had this inverted hammer shooter candle, right? And that one took us all the way down for the week, guys. If you really look at that candle took us all the way down, guys. So that was a beautiful setup there. And then I'll show you some more plays that we took. So right after that, we had the morning leg for Tuesday, which was right here from low to high. And you can see, like I said, it was similar to here, where it was a shallow pullback. It went to the 382 and then made a new high. The new high went to the 272 extension. which is always going to be an area of a reversal. Okay. And then from there, we had this big sell-off. Okay. This sell-off, if we take the fib from the low to the high, it blew right through the fibs. So whenever something blows right through the fibs, you know that you got to switch your direction. So the direction changes now. You start going short from high to low. We had a 382 right there. We continue down the ladder from high to low right here. Okay. From high to low here, you have another 618 going over. Okay. So those are nice fibs, nice ones. And you just keep using your layers. Okay. Keep layering and continually drawing sequential legs. Okay. So we had the FOMC day. So the FOMC day, we had that orb in the morning. Like I said, we take the fib from the high to the low in the morning. We had this 382, bam, bam, bam. So a triple rejection on the 382, nice scalping opportunities. And then eventually we did get to the 618, and the 618 here took us back down. So great Fibonacci action going into FOMC. You know there's going to be a lot of Fibonacci action because of the increase of the algos and the bots. So this was the last part of the FOMC, so we can ignore that. Now going into the next day, right? Like I said, I took the short and I used the prior day's range fib right there to get short near the 786. Okay, so we took that short earlier, which was right around here. Yes, sorry, right around here. Exactly. So we took that one, beautiful drop down there. Then from there, you could actually see we had two legs. We had this low to high right here, 786, made a new high barely. And then from there, reversed. And if you take this side now from the high to the low, we hit a 50 and we moved over. So pretty intense. All fibs, really. If you really drill into this chart, you're going to see all the fibs. And then you could see here on Thursday, if we take it from the low to the high, the previous day's range, this was the 618 that I mentioned on Friday. That was a big runner. Okay. So there we go. Fibs in 2 minutes. Beautiful. All right. So we do take fibs. We do talk about a lot of fibs in the room, but I don't mention it I don't want to mention it over all the time because it's overwhelming for a lot of new traders. So I like start off with an orb, learn the orbs, learn those easy patterns, and then you can start adding the fibs on top of your patterns, and you're going to start to see amazing results. Okay. So here we go. Check me out at tradingwars.com. If you like what I did today, guys, if you enjoyed it, if you want to trade live with us on Monday, please check us out on tradingwars.com. The fibs that I just talked about are in my Fibonacci and Options Mastery book/course. It's a 2-part book. So definitely grab a copy of this book if you're interested. We're going to be raising the price of this book pretty soon. So definitely grab this if you like the fibs. Okay. Otherwise than that, the book comes with 1 month for free in the room. So you get 1 month, which is basically $49.99. So you're really only paying another $40 basically, okay, to get the book. So there we go, guys. I hope you enjoyed. Tomorrow I'll be on stream with Sarah Strat Sniper, and we'll be talking about how she uses the 50% Fibonacci for her rules. So that's going to be a great stream. So looking forward to seeing you tomorrow. We will be doing some giveaways tomorrow. So please don't forget to comment, like, and subscribe. If you leave a comment, you have a chance to win the giveaway tomorrow. Okay, so please do that right after this video. Thank you very much. All right, take care.